with part 2. Okay, Mara draft income statement for the year ended 31st March 2022. Show a profit for the year $38,750. So on 31st December 2021, Mara received 5% bank loan of $4,800, which was incorrectly treated as revenue receipt. Okay, so revenue receipt means it's income. So now you wrongly treated as revenue receipt. So in error, whole year interest on the bank loan was included in the draft income statement for the year ended 31st March 2022. What was the correct profit? Okay, so we start with the draft income, a draft profit. Okay, so draft profit is 38,750. Okay, now because they said that Mara received 5% bank loan, okay, 5% bank loan for 1,800, but was incorrectly treated as revenue receipt. Revenue receipt means you record in the income statement, so you need to deduct first this 4,800. Okay, you need to deduct this 4,800 from the profit because you included in the revenue. Okay, so you need to deduct the bank loan. Okay, then they said that in error, whole year interest on the bank loan was included. You include whole year interest. Supposedly, because you take the loan on 31st December, okay, because the loan is took on 31st December. So how many months until the 1st March? Should be only for 3 months. But you include whole year. So 9 months you need to add back. 9 months profit you need to add back. So how to find? So 5% multiply loan 4,800 and then multiply the 9 months that you should not include it. So this one is equals to 5% multiply 4,800 multiply 9 over 12. So this is 180. So this 180 you need to plus back. Again, you need to plus again. Okay, interest on loan that should not included in the income statement. So you need to plus back 180. So when you do 38750, you minus 4,800 and then you plus 180. So it should be the answer is 34130. Okay, the answer is B. Okay, move on to next question. Which statement about the reducing balance method depreciation is not correct? Reducing balance method. Okay, reducing balance method, what is the formula? So the formula is the percentage you multiply with the net book value. How to get net book value? So net book value is you get from the cost minus with the provision for depreciation. Okay, so let's look at one by one. So A, lower amount of depreciation is charged in the early years of the asset life than in the later years. Wrong. Okay, because when you use reducing means the first year you should be the higher depreciation, and the next following the next year will be lower than first year. Okay, so A already is wrong now. Okay, B, each year is given percentage is deducted from the cost of the asset less depreciation. Yes, this is the formula from what I mentioned above. Is used for asset which create greater benefits in the early years of their life. Yes, because the depreciation will be higher at the early years of their life. The net book value of the non-current asset will never reach nil value, means it will never be zero. Will never, because you keep minus with the provision for depreciation from the cost. Okay, so the answer is A. Okay, 13, the financial year of Yung ends on 31st March. On 1st April 2021, he purchased a machine for 4,000. He estimated that it will have a useful working life of 3 years. Okay, and residual value of 100. So they say Yung used straight line method of depreciation. The machine was sold on 1st April 2022 for 1,500. What was the loss on disposal? Okay, so when you want to find loss on disposal, better for you to open disposal account. Okay, better for you guys to open disposal account. So debit side must be the non-current asset at cost. Okay, so non-current asset at cost is 4,000. Okay, so non-current asset cost, this one is machine, so must be machine at cost 4,000. Credit side will be how much you sold the machine. The machine was sold for 1,500. So I assume whether it's by bank or cash, can be Okay, 1,500. Another one should be provision for depreciation. So it should be the accumulated depreciation. Okay, so how to find the accumulated depreciation? So what we need to do is, okay, you look at how many years. So you use straight line method for 3 years, residual value 100. So what is the formula you can use? Okay, so straight line method cost, okay, so cost 4,000, you minus with the residual value 100, you divide by the useful life, which is 3 years. So 3,900 you divide by 3, so each year will depreciate 1,300. Okay, because you sold the machine on 1st April 2022, you buy on 1st April 2021, so only for 1 year lah. So the provision for depreciation will be 1,300. Okay, so as you can see here, debit is more than credit, so means you will have loss on disposal. Okay, how much? So 4,000, you minus 1,500, you minus 1,300, so it will be 1,200 loss. Okay, so the answer will be B. Okay, so make sure this side both is balanced lah. So 4,000 and this one also 4,000. Okay, next one, 14. On 1st April 2021, commission receivable 210 was outstanding. Commission received during the year ended 31st March 2022 amounted to 4,850. Which journal entry should have been made at the end of the financial year 31st March 2022? Okay, so beginning you have commission receivable 210 outstanding, means you not yet received for the last year. Okay, was outstanding 210. So this year only can be how much? Okay, so this year can only be how much? Because this one, the outstanding is for the last year. Okay, so means this year only 4,850, you minus 210. So 4,850 minus 210, only 4,640. Okay, because it's commercial receivable is income. So income will be on the credit side, okay, of the income statement. So you credit income statement 4,640 and debit commission receivable 4,640. Okay, so the answer will be A. Okay, how another way you want to do this? Okay, if you cannot understand, so better for you to open the commercial receivable account. Okay, so you can see outstanding, commission receivable outstanding, so it's a accrued income. So accrued income is basically current asset, so the balance will be here. The balance will be 210. You receive, okay, 4,850. When you receive the money, you will debit back. So you credit commercial receivable. Okay, so you credit commercial receivable 4,850. Maybe you can just put bank. Okay, alright. So they say, so should be no balance lah, because they don't give us any balance. So we just need to close the account. Okay, so this credit side is more, 4,850. Okay, so the balance will go to the debit, but we not call balance, we will transfer to the income statement. So how much we transfer to income statement? 4,640. Okay, transfer to income statement. So that's why it's debit. It's on the debit side of commercial receivable account and you credit income statement. Okay, next, number 15. Nula financial year end 31st December, she maintained provision for doubtful debt 5% of trade receivable. On 1st January 2021, the provision amounted to 800. Okay, on 31st December 2021, trade receivable owed 30,400, of which 600 was regarded as irrecoverable debt. So how much provision for doubtful debt on the 1st January 2022? So what we need to do is, we have the beginning provision for doubtful debt. Okay, we have the trade receivable and also we have the irrecoverable debt. So we need to find the net trade receivable first. Okay, so because if you want to find the new provision for doubtful debt, okay, because it's 5%, need to multiply with the net trade receivable. So how? Need to deduct first with the irrecoverable debt. So 5%, you multiply 13,400 minus 600 is 12,800. multiply 5%, so will be 640. Okay, as you can see from here, previous year 800, this year 640. So basically you have decrease in provision for doubtful debt. Okay, this is decrease in the provision for doubtful debt by how much? So 800 minus 640, 160. But the question only asking you for the provision for doubtful debt at 1st January 2022. The one that we find here actually, okay, because the answer is to find provision for doubtful debt. Okay, the new balance for the provision for doubtful debt. So the answer is B. Okay, unless the question asking you how much will be transferred to the income statement, the answer will be 160, because decrease in product provision for doubtful debt will be treated as in other income. Okay, so you need to transfer to income statement. Okay, next. After the financial statement for the year ended 30 April 2022 have been prepared, a trader discovered that the closing inventory had been overvalued. So what will be the effect of this error? Okay, so the question asking you, trader discovered closing inventory had been overvalued on 30 April 2022. Okay, so if you want to find profit, okay, we need to know that the formula is sales minus cost of sale minus expenses. Okay, so we need to understand first on the cost of sale. How you find the cost of sale? So beginning inventory plus purchase, you minus closing inventory. Okay, because closing inventory, the ending inventory is overvalued, overstate. So what happened to the cost of sale will be understate, because they have negative relationship. Okay, so the cost of sale understate. So when cost of sale understate, okay, what happened to the gross profit? Gross profit is sales minus cost of sale. So when cost of sale understate, gross profit will be higher. So when gross profit higher, obviously profit will be higher lah. So profit will be overstate. Okay, if we add, okay, if we treat, because this one they want for 30 April 2023. So during 30 April 2023, this one will become the beginning inventory. Okay, this one will become beginning inventory on 1st May 2022. Okay, now we change it to beginning inventory. Okay, so when the same thing, okay, so cost of sale equals to beginning inventory plus purchase minus closing inventory. So when beginning inventory is higher, because closing inventory, previous closing inventory is higher, so the now beginning, it become beginning inventory higher, the cost of sale is higher. Gross profit is equals to sales minus cost of sale. So when the cost of sale higher, the gross profit will be lower. So now it become understate. Okay, so that's why the suitable answer here, you can see obviously A. Why the capital overstate? Because profit higher. When profit higher, capital will increase, overstate also. Okay, next, 17. Mariam owns business, provide accounting service. She provide the following information for the financial year ended 31st March 2022. Okay, so they give you the fees owed by client. 1st April 4,400 fees received from client during the year ended 31st March 2022, 22,500, and fees owed by clients on 31st March 1,400. What was the amount fees shown in the income statement? So better you to open fees account. It's okay because this one is accounting service, so the fees is income. Okay, fees is income. Fees owed by clients. So fees owed by clients is accrued income, so it's a current asset. Okay, so the balance will be here 4,500. Fees owed by client, also this one will be the balance CD, because on the 31st March 2022. Fees received, so means when you receive the money, so debit bank, and you credit the fees account. Okay, so let's say I press bank 22,500. So you need to know how much to transfer to the income statement. So what I need to do, just close the account. So 22,500 you plus 1,500, is 24,000. Okay, minus with 4,500. 19,500. So we transfer to the income statement 19,500. Sorry. Okay, next, which item will not appear in the appropriation account of the partnership? So in the appropriation account, what we need to do is, okay, profit for the year, you plus interest on drawing minus interest on capital and salary. Okay, so interest on drawing have, interest on loan don't have, because this one will be appear in the expenses and the income statement. Interest paid on capital, yes. Salary, yes. So the answer is boy. Okay, Carol and Dina's are in partnership sharing profits and loss in the ratio 2:1. Dina's current account balance were as follow. Okay, you can see that. So she had made no drawing during the year. Okay, so what was the total profit made by the partnership in the year ended 30 April? They want the total profit. So they give us Dina's current account as follow. So let's open the current account. Okay, so have debit balance 1st May 2021. So balance BD 2000, and they also have balance, means that on the 1st May, this one is 2021, May 1, and then they told us on May 1 2022 the balance is on the credit. Okay, 7,000. So means the balance CD will be here. We must be opposite. Okay, so balance CD will be here 7,000. Okay, 7,000. This one at the end of year lah, 2022 April 30. Okay, so they said no drawing. So how much profit then? So if the profit, so means that you just need to plus it together. Okay, so the 2,000 and the 7,000, because profit share will be on the credit side. Okay, so here will be the share profit on the credit side. So when to do it, just plus, so 11,000, 9,000. 2,000 plus 7,000 is 9,000. So here will be 9,000. Okay, but not finished yet, because they asking for total profit. Okay, the Carol and Dina's in partnership is 2:1. Okay, this Carol got 2, Dina's got 1. So if Dina's got 9,000, how much Carol got? So Carol profit is 9,000 multiplied 2, which is 18,000. Dina's got profit 9,000. So you plus together 27,000. So the answer is donkey. Okay, next one, 20. Which statements are correct? Okay, debenture holder of limited company is liable for the debts of the company. Debenture holder of limited company is liable for the debts of the company? No, obviously no. Okay, debenture holder only because debenture is non-current liability. So non-current liability will not liable for your debts, for the company's debt. So wrong. A partner is liable to pay business debt from the personal asset. A partner is liable because for partnership they have unlimited liability. Okay, partner have unlimited liability. So yes, anything happen to the business, their personal assets will be at risk. Correct. A shareholder of limited company is responsible for the company's debt? No, because shareholder they have limited liability. Okay, they have limited liability, so they only need to bear the risk of their the amount that they invest only. Okay, so they will not liable for the debt. So 3 wrong. So trader is responsible for all that? Yes. Okay, because you need to remember partnership and sole trader, they are unlimited liability. So anything they need to bear the risk. Okay, so the answer is 2 and 4.